Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Thursday. It is the 2nd of May. We are officially into May now. A little more selling, but a little lighter as I don't think people are quite ready to throw in the towel. At least the bulls don't appear quite ready to throw in the towel just yet from a broad market perspective. And welcome out, everybody. Hi, Patricia. Welcome, everyone. Great to see you guys as always. Hope you had a great day both in and out of the market. Just a little more drifting. We did see the energy continue to break down. That follow through came from yesterday, and well, it kind of came violently, might be a little bit of a stretch, but it definitely sold. And good afternoon to you as well, Ed. Hope you're doing well, my friend. Always nice to see you. On the earnings front, still a little bit coming at us going into tonight or tomorrow morning. Of note, you got Activision Blizzard, always one of my favorite companies to follow. But around, just over a half dozen, or just over a dozen and a half companies from the S&P, Gilead Sciences, Activision Blizzard, Monster, Arista Networks. So we do have a good slate coming out here tonight. Pretty light, at least for this time of year. Tomorrow before the open, only about a half dozen or so. American Tower, pretty big REIT, kind of leading the charge going into tomorrow. So we, as we work into next week, we still have next week will still be a little bit heavy, not as heavy probably as this week, but we still have about one more week of earnings season. I talked to Ilka last night and I was telling him at the beginning of earnings season, I'm so excited, feel like a kid at Christmas. And by this point in earnings season, I'm done. I've had enough. I'm ready for it to be over. So we're getting close. And hey, Mike, good to see you as well. Taking a look at the heat map, really of note, more selling in the materials. We did drift down a little bit on the market, kind of doji type of a day. But biotech fought back pretty nicely today, though. We continue to have that battle over in the healthcare sector, and that's one to watch. We got one more day, and then we'll see where that candle takes us on that weekly chart. I think that's what we're looking for on the healthcare sector. Before we get into that, of course, here we are on the S&P. Started to drift very early, and then a nice little bounce back day as traders said, hey, one day is a pullback. And then they kind of remembered, oh, no, it's not. And then we kind of saw a little bit of a drift to the upside in the second half of the day. So it looks like we're still kind of in that pullbacky phase overall to me, but a nice, big but doji candle. If we look at this on the futures contract, looks a little more doji like on the S&P 500. So we're kind of still, to be not quite done with the pullback. That can change as early as tomorrow, but I believe with today's price action, where things ended for the most part, it has me thinking pullback, as I was kind of thinking, hopefully a small doji candle tomorrow. We got one more day of selling. Let's get one more. And good morning, Lloyd. Good to see you, sir. Hope you're having your coffee. So as you get going, so sitting right on those moving averages, right above 2,900. I don't know that that's a huge important number from a purely technical point of view, but certainly a big round number. We know that traders can, use those numbers. So a little bit more pullback here today across the board. Over on the Dow, kind of working back in towards that old support or old resistance zone that we recently have broken out of. So we continue to drift a little bit, as you can kind of see, much like the S&P did come off of the intraday lows and fought back to kind of close a little bit with a little bit of more momentum than we kind of started with. We kind of had that type of a day where we really caught our footing the second part of the day, and nothing crazy, but did drift to the upside. Much like the S&P, over on the NASDAQ, we're kind of hanging out right in between that 9 and that 20 simple moving average. Again, leading me to believe that while the confirmation isn't there, we're kind of now in that lower high, lower low day to day. I think for me, at least, that's kind of how I'm thinking about it, waiting for that to kind of shift gears. But I think that's really what we're looking at. I know that's what I am looking at from a broad market perspective. A little bit of a pullback, not particularly a beautiful pullback, right? Not necessarily one for the textbooks, but I do think it is a little bit of a pullback opportunity that is developing in the NASDAQ. Now we do have the jobs report tomorrow, so maybe that can spark traders one way or the other. I'm not so sure. But that can be something, as we know. Sometimes the market just wants a reason or an excuse to do something. Over in RUT, to everybody's, probably a delight, we continue to hang around within this trading range. Really not a whole lot to see here, which is usually a good thing for us here at Tackle Trading. We like boring RUT. If we like anything, we like boring RUT right here at Tackle Trading. So we continue to trade within this same range. First level of support down here in that 1555 to 1560 range. And of course, you know the drill on the top end at approximately 1600. But again, as I always say, for me, it's 1605. So still very sideways in the rut. Now we're kind of working into some shorter term support levels, whether it's, a swing low in the rut over on the Dow Jones. We're kind of testing this old breakout point, with the 50-day moving average right below us, our rising 20 over in the S&P and the NASDAQ. So price wise, I think we're getting to a point where maybe we could start to see buyers interested from a pullback perspective. Confirmation wise, I don't think you can say that yet personally, but I still believe with the way that it's played out with the trend and we're still holding on these support levels, I still am looking at this as a pullback opportunity myself. Some interesting thing going on over in the materials sector. Doji right at that old support and resistance zone, right? And this is an important price in my mind on the ETF. I don't think today's candle tells us a whole lot, but this is a pretty important price in my mind. Big resistance level, major breakout point. I'm liking where it is. I don't love this chart, but, and maybe this is just me, as we look at the components or the top components of this ETF, if you remember last earnings season, something similar happened to, let's come back to it. We had, we really were doing all right. And then we had really quite a bit of selling, and I'm not exactly sure where that was, but a big part of it was Dow DuPont, where they missed their earnings and they kind of dragged the sector down with it. And it looks to me like that's exactly what happened here today. Dow DuPont not impressing anybody with their earnings. We are in a very nice little range here if you think about it a little bit longer term on Dow DuPont here. So this is going to be an interesting level of support. We did see it come off of those lows on the intraday. Certainly not something I'm all that interested in. Here was, I think here was that, yeah, there's our January gap. So we kind of had that similar type of situation. But if you look at the other components, I don't think it looks so bad. Lynn held up very nice here today, one of my favorites, although some days I like it more. And hey, Daniel, good to see you, buddy. I had a chance to meet up with Daniel a little bit ago. We talked all sorts of trading. Always a good time. And hey, Scott, good to see you. And welcome aboard, Daniel. Great to have you with us, my friend. So Lynn, I mean, it's holding up what I expect it to hold up, at least, whether I should or shouldn't. It's battling at that 20, but I kind of expect that to be the case. Echo Lab still hanging in there pretty nicely. Sherwin-Williams still holding its recent breakout point. Some good buying going on over there. Really good bounce back day on Air Products, which, if Air Products has taught me anything, it's never doubt it. It will always go up. I know that's not true, but certainly that's the way it's been going. Not such a pretty chart, but certainly not an ugly chart on PPG. It's really, as I look at the components, it's Dow DuPont with that pretty terrible response to earnings. And then some of the mining, Newmont, of course, we know it's taken a pretty good beating these past couple of weeks. It's at a support level, though. I wouldn't want to buy it, but it's really, a new core here in the steel. So it's really kind of looks to me like it's more isolated in certain places versus others. So I'm not ready to turn on this sector just yet. I think this is an important price as we're looking at this 56 and a quarter range, and it did hold up. We dojied right there today. I'm not going to be surprised if we do see some buying because of that. Not sure that I need to be super aggressive, because one thing that does concern me is, regardless of how we got here, we have failed at resistance, and we did at least pierce that old resistance zone. So some areas to be a little bit concerned about, but broadly, I still do like this area. I don't know that I should, but I don't think that the totality of it suggests it's kind of as rough as maybe it looks as I look at some of the more individual components. So that's where I find myself. Very interesting development over here in the materials sector. It'll be interesting if Dow breaks that support, maybe starts to push some more pressure on some of the other companies, then maybe I'll have a few more reasons to be concerned. I have my reasons to be concerned on energy. That follow through really happened early today. We were kind of hanging by a thread there yesterday. I wasn't quite ready. I was scared. I was not optimistic by any means. Ari, good to see you, buddy. But that close, that support level, you guys know how I view that support level. With this follow through here today, I think at the very least you have to go into a neutral state of mind over in energy. My bullish was taken away with this break of support. And so for me, I'm looking at this as a selling opportunity, not specifically for tomorrow, but we did this before, but I think it's kind of fun to do it again. Energy stocks are looking rough. Exxon continued that break. Chevron has continued to push down off of that retracement off of that break. ConocoPhillips continues to fall. So these components have really broken down. My favorite, stock to pick on in the energy sector, EOG, for whatever reason. I don't really have anything against them, but it seems like they're my favorite one to pick on. So, these things are not looking particularly great for the most part. I think at this point in time, you have to kind of say we had a good run in energy, and we'll get another one at some point in time. But right now, I want to see that next retracement before I really think about doing a whole lot, broadly speaking. I want to see it kind of work back into that old range and these moving averages before I get too excited from a bearish point of view. But with this follow through off of that piercing, or at least closing at support yesterday, I'm going to call this a break to the downside. There's not a lot of strong support. We had this little pivot, and you saw when we were looking at those individual charts, some of them have some support zones, but some of them look to me like they still have some room to work to the downside if they want to before they start catching support. So I expect this is going to be the biggest, rating changer for me as we go into the scouting report meeting. Last week we hadn't broke support. Today we have broke support. And well, when you break support, I am not going to say very nice things about you, at least from a bullish point of view. So energy looking a little scary to me. On the other side of it, I have financials hanging in there, sitting right on top of that 9 EMA. I continue to really like this area, and really will, as long as we hold this 27, 40 or so range. I will probably like this as one of my favorite areas. We really held up nicely here today for the most part within the financial sector. Gotta like it. In my mind, it's still being pretty well behaved. Over in the industrials, just kind of much like the market, just kind of drifted and then rallied up off of it. I don't really think a whole lot of new things to see here in the industrials. Cat really was selling off, and that didn't help it out any, but still hasn't broke support necessarily. And while I'm not going to be looking at Cat, it'll be a while before I bring out the Caterpillar hat. One day it will come out though, and I look forward to that day. Cat's always one of my favorites to follow. I still think as long as we're holding this breakout point, that we are still looking at this from an overall bullish perspective. So I still do like this area a lot more than certain other areas in the market. Don't love it as much as I would like to love it, but I still believe at the end of the day, as you look at the technicals, the most likely outcome is the support level holds and we continue to work up, and we look back in 2 weeks and say that this was just a little sideways period. Now, if the support gives out, I will certainly be open to changing that evaluation, but as long as we are holding, and I'm going to use the lows from last week. We've used 77 a lot, and that's kind of been the ballpark range, but I think with the upward movement off of those lows down here at about 76, 70, we can use that as kind of that first level of support. Over in tech, a little bit more of a pullback, much like the NASDAQ. So we had a whole month above that 9 exponential moving average, ton of momentum. We are seeing things pull back now. I don't think it's, broadly speaking, ready to rock and roll tomorrow, but absolutely expect to have some pullback opportunities in my watch list for next week over in this space. Not pretty. I don't love the way it looks. I mean, a big part of that is yesterday's candle. We started up right on Apple, and then we filled back as the market sold off. So it doesn't look like again, not one for the textbooks, but I still am overall looking at this as a little bit of a retracement opportunity in the technology sector. Same with the staple sector. We had that break a couple days ago. Then we had this big, we got caught up in yesterday's selling, ended up with a big bearish engulfing candle here, gobbling that breakout up yesterday. Little bit of a doji here today. I need to see some movement. I need to see it continue that, but I do expect that if we can have a nice, decent close tomorrow, a bullish close tomorrow, I'm going to call this a pullback opportunity. And if it's not my favorite place, it's going to be one of them. Not quite. I don't want to get too excited, but I would be lying if I said I wasn't kind of excited, because this was a nice break. We looked and watched this break for a while, and then we had that really great break with really good follow through. And then when I think about kind of where the market is and where we end up on our chart, did just what the market did yesterday. Didn't do anything crazy. A little bit of a doji here at that old resistance zone, at those moving averages. I really like this, but I need one more day. I need one more day before I can really, really like it. But I do expect that I will like this pullback within this sector once we get it. And I do think that confirmation could happen as early as tomorrow. On the other side of things, utilities continue to just hang in their range. Really not much to see here. Like we kind of talked before, it's 57 to 59 is where we find ourselves. Many of these things are sideways, still have to be leaning overall to the bullish side because, well, we haven't really done anything bearish in my mind. We just have, consolidated after the break. So we're either doing nothing or collecting our dividends on these stocks and calling her good for the time being. We will eventually come out of this range, and I do believe either way can be a signal leading us into what way we want to be looking for the next wave of price movement. But your guess is as good as mine. You make me guess, I would bet on up because, well, I think there's more reasons to believe that than not. But we are sideways, and there's really no debating that. We've been in this sideways range for quite some time now. Another interesting price point, and I want one more day, is over in the healthcare. It continues to do this battle. What I'm really watching are these weekly moving averages. That's why I want one more day. We have this weekly moving average stack kind of sitting right on top of us. If we can push through that, I think you have to call that a bullish signal. And so at the very least, I'm going to really start shying away from some of these from a bearish retracement perspective. But quite honestly, not broadly speaking, we know how some of these stocks within this space look. But I think that's a pretty strong signal if, and that's a big if, it hasn't happened yet, if we can close above these moving averages on tomorrow, so the end of the week candle, I think that's going to be a little bit of a bullish signal, and it's going to be time to be a lot more open to being bullish. I've not been very open to being a bull during this recent healthcare rally. I'm sure many of you haven't either. For me, for the most part, I've been watching it as a bearish retracement, and for the most part, I'm still watching it as a bearish retracement. Haven't really seen a lot of opportunities to, broadly speaking, get into those. I don't think the retracements are quite done yet, but I think this one's still, for me, it needs one more day before we do. Now, on the other side of things, if we do take out this 9 EMA, then I do believe that that's going to be the signal. I think we're in a really interesting spot in healthcare where we're getting a signal really, really soon between where we are in resistance, where we are on the different moving averages, both on weekly and daily timeframes. Not a terrible earnings season in my mind for this sector at all. Some of the healthcare plans had okay earnings reports, for example. Need another day though, but this to me is a very important price point, and I'm really looking forward to seeing what that weekly close looks like here tomorrow. Don't think you do anything with it until then, at least broadly speaking. And from a retracement point of view, I still believe we need to get back below that 9 EMA before we start across the board looking at entries. That could be a signal, and that would mean that we were pushed down from those weekly moving averages, which you don't see that a lot. You don't see that stack like that a lot on the weekly time frame. So very interesting times. Another nice little doji over here in the discretionary, came right back into that 118 range on the intraday and rallied up off of it, giving us a nice doji to close the day. Again, much like the tech sector and things like that, I do look at this as a pullback opportunity within this area. 118 makes the most sense for the support zone that holds us up. That is our recent breakout point. Doesn't have to hold us up. We could pull back a little bit deeper and not really do anything wrong per se, but I always like it when that old resistance does act as our support on the stock or the ETF for that matter. Again, you could, aggressively speaking, I think if we push up tomorrow and take out today's high, I think you could start to make a case to move back in. It's a little aggressive, and so it's not going to be everybody's cup of tea. I certainly understand that, but I really like the placement, really like the price action. Really makes sense that it's kind of working within the confines of the overall market. Pretty decent little pullback in my mind. Still think broadly we probably want one more candle. We want one more confirmation candle because as of right now, we still haven't been able to get that. But this doji gives me reason to believe that it could happen as early as tomorrow. Then you have our poor friends in real estate who did the exact same thing today as they did yesterday. Yesterday, they broke out and really, really ran and then got caught up in the market today, and then they sold off. And then today, they broke out, really, really ran right back up to that old high from yesterday and then completely flipped the other way. It is having a really hard time breaking that resistance, even though on the intraday, it's been, I laughed when I saw it. I'm not really doing anything with the reach right now, but I did laugh when I saw it. It looks like almost the exact same candle as yesterday at the exact same prices as yesterday. It seems like buyers want to do this, but they're just, I don't know, it's kind of weird. It's kind of weird that yesterday made sense. Today, it doesn't really make as much sense to me as yesterday did, I guess. But we're still right there fighting on that breakout one way or another. I imagine they probably are looking at it because if this would give us this upward trend where we have these higher highs and higher lows. Think, if you really are liking this space, you could probably argue it's happened. I wouldn't because we failed on the intraday in both cases, but that is just me. On a support level, I mean, it's still going to be down here at this breakout point for me. So really, this is more of a neutral space, much like the utility sector, and it continues to remain so for me. And lastly, over communication services, nice pullback continues. Of course, this gap down, not pretty, but we know that we can blame that one on Google, right? That was the Google earnings. Daniel, Google is a huge, and Facebook make up huge percentages of this communication services ETF that we're looking at. And so when they do something on earnings, it tends to really impact how this ETF looks, just so you know. But it's starting to simmer down into these moving averages. We did have a hammer candlestick here today. Got Activision Blizzard coming out with earnings before tomorrow's open within this space. And so Daniel's a gamer too. We talked a few video games in addition to trading. But this hammer candlestick has to get you kind of thinking that, yeah, maybe this is a pullback area as well to be looking towards. So with the way the market is right now, I think it's starting to shape back up into kind of a stock pickers market where there are going to be bearish opportunities on different stocks or in different areas, along with plenty of bullish opportunities. Energy, probably the big one that I think, for me, you have to take a step back and put it into somewhere between a little bit bearish to a little bit neutral. That failure at support, I think you just have to say, well, we had a good run, and unless you get back above that, I'm not talking bullish with you, at least short term. We'll see where that one takes us from a broad perspective. More follow through on the dollar here today. Whoops, that's not the dollar. That's the dollar. On the dollar index, we saw that nice hammer candlestick develop after the Fed announcement here yesterday. Really solid follow through on that candlestick here today. This is a pretty bullish signal. Many traders here at Tackle Trading, we're waiting for that break. I'm loving the way it looks. If you think about this on a weekly, and that's really how, as you guys know, I've been looking at the dollar. I'm not much of an intraday dollar trader. That's not my style. if we can close this break, and that's all I really care about is, do we close it? And I expect us to, with the price action that we saw yesterday and today. If anything, I expect it to go up more tomorrow. But most importantly, I want to see it close this breakout here on this weekly chart. This is kind of a longer term thing for me. As long as we're holding this break, I expect us to overall work to the upside in the dollar, like many other traders out there. Great follow through today. Pretty good looking weekly candle. We have one more day to get that close on that week to confirm that second week now on the weekly candlesticks above that breakout point, which I think is a good bullish signal. Over on the VIX, little bit of movement here today, as of course we sold yesterday. We had that spike especially when we haven't sold for so long. So we're seeing a little bit more volatility coming into the market. That doesn't really concern me, but what it can do is many of, well, you guys know who are trading credit trades, credits haven't, been particularly great this last little while with kind of low volatility. A little bit of a spike in volatility could open up the door for at least a little bit better credits. I think it's hard to say that we're volatile or those options are all of a sudden expensive, but they have picked up a little bit with the increased volatility. I don't think the VIX is telling us much from a chart perspective. Made sense. We've been very spoiled in the market as of late, right? And so yesterday, our first real day of selling, for goodness sakes, it was not even 1%, right? But it was our first real day of selling. We started that early. So volatility has picked up a little bit in the marketplace. Maybe, again, it's probably because we've been spoiled. That's my theory, at least. We've been spoiled as of late, and so anything is it doesn't go straight up. 0.3, 0.5% at a time, day after day after day, all the time. So over in the metals, more selling in gold as the dollar continues to rise to the upside. Big takeaway here in my mind is our resistance formed here at this 1290 as that new swing low. So again, for me, I'm not really particularly bearish on the dollar. I'm certainly not bullish on it. Don't think it's a great trading environment right now. I prefer silver if I'm trying to directionally play the metals market personally. But if we do take out this low, and that's one thing we can kind of keep in mind, if we can kind of clear all of this noise that is established when we first took out that 1280, then maybe we'll see a little bit more selling, right? If we look at this on an hourly chart, we do have this potential double bottom. A break below that would be a breakdown on that time frame. That would take away all of these little all this noise that formed when we first broke down below that 1280 a couple weeks back. So below that, I certainly could make an argument for it. I still think that silver is an easier place to play from a bearish perspective, at least, and I don't really think I can get on board with the bullish bias in the short term on the metals right now. That breakdown continued here today. Again, we've got a pretty good idea, not that we didn't know it before, but now we have even more evidence that this $15 marker, or approximately, is the line in the sand. That's a tough thing to get above, and as long as we're not above it at this point in time, I think you have to stay with that bearish bias. A little bit more selling here today. There's not a lot of support as we look at this. I'm just going to steal this line. I would say our next real level of support is going to be down here at around 1450. I think that's probably the most likely place to develop into our next support level. Not a ton at 14 and a quarter, although a lot of times you will see that those type of numbers play in silver. But right now, we really don't see any reason why anybody's running off to buy it from a technical point of view, at least. More signals to the downside than the upside, lower highs, lower lows. Broke support, follow through here today. So overall, I think you're still looking at this from a bearish perspective as we're moving into next week. Over on natural gas, we're going to have to zoom in here. We came a little bit closer to, for those retracement traders out there, and I know there are some that are looking at natural gas as a retracement. We continue to hold this 9 EMA, this rising 9 EMA. So at the very least, we want to be able to push down below that, right? That's kind of propping us up. Did see some more selling today within the natural gas market, but I don't think enough to confirm that this is a retracement. Now, as you guys know, I don't look at it this way. I look at this at natural gas as it is just testing the support zone. And I don't believe that it has clearly broken that support zone, and certainly not enough to justify a trade on it. So I'm not really looking at this as a retracement perspective, but as you know, no one's ever accused me of being the boldest trader out there. So if I am, I certainly still want to see us push down below this 9 EMA. Now, with the way the price action developed today, that would take out today's low. Right now, we're going into the weekend, so hopefully nothing to see here tomorrow in natural gas, and we get a reset for our open here next week on Sunday. The big one, though, in the commodity space is the energy, or I'm sorry, the crude oil. It certainly broke down today, right? Wherever you had that, whether it was 63, the actual lows down here at 62.30, whatever it is, it broke down. This is a tough chart right now. I can't go bearish on this. Much like energy, I think energy is a lot more bearish of a chart in my mind than the crude chart is. Don't get me wrong, but I don't think there's enough evidence on crude to suggest we should go bearish just yet. I do think you have to look at this as a bearish signal. We failed at support, that's not a good thing, right? Now, technically speaking, we've made lower highs and lower lows, right? But we're still above a lot. We're still, we've got that 50 rising up into that 200-day moving average. We're still above this weekly 9, right around $60 is kind of the line in the sand for me. So anything above 60, I don't know that it's going to be easy to trade. This could still, in my opinion, be a pullback above $60. A tough one to trade, though, at least with how it looks right now, because I don't think you can buy crude tomorrow. Or if we see a doji tomorrow, I don't think you can buy it on Monday. I think at the very least you have to get back above 63. So, I mean, ideally, from a bullish point of view, we kind of build a little bit of a floor next week above those moving averages, above that $60 marker, and then see some movement the following week. That could be the way it develops from a pullback perspective. If we're going to continue to work to the downside and this trend is over for the time being, for me, I need to see it below 60 before I get really bearish personally. We've got old price. We've got lots of moving average stuff there. I'm not willing to be bearish on crude, but I do think we have to be cautious on this pullback, make sure we get exactly what we want, if that's what we're looking for, at least. Not a great look here today, clearly breaking out of that support zone. Not necessarily a good thing. So, ladies and gentlemen, that is where we are as we are getting towards. We're more through earnings than not, and we've got that jobs report tomorrow. Again, what I'm hoping for is just another small-bodied candlestick tomorrow. Maybe even a little bit to the upside. If we get a small, green candle on things like the not utilities, on the staples sector tomorrow. If tomorrow we're closing and we see a green candle that closed at 57.25, I'm going to really be excited for Monday morning within the staples sector. Same with the discretionary sector. So that's what I'm still pulling for. Never hurts to ask, right? You can't, you're not entitled to it, but you can always ask for it. Johnny sent me a message over on Twitter just as a quick request to kind of talk just about putting together, kind of the risk reward thing that you can do here on TradingView. So I know Johnny's not with us. He's at work right now. He'll catch the recording a little bit later. But basically, and you guys see it probably pretty regularly, and I'll go to something that I'm either following or working with. A lot of times I'll have something like this set up on it, right? I'll have my, my risk reward kind of put together. So I do all of my technical analysis on TradingView personally. It's my favorite charting platform. And well, when you look at lots of charts, it's important that you like the way your charts look. And it's just like anything else. Beauty is always in the eye of the beholder. But for me, these are the most beautiful charts. So what I'll always do when I'm kind of thinking about RTN, just as an example here, kind of hanging at a support level, potentially if this thing does break to the downside, that would be a sell signal in my mind. We don't have a lot of support until we get back into here, which we're kind of looking at these old lows. So I'm just going to kind of show you how I do this, Johnny. So basically, I don't know how it's going to play out. And for my rules, at least, for breakdowns, I need to see a close. So these guys could break support tomorrow, and well, good for anybody who's trading them as a bear, but it won't be me. I need to see it close. So I have no idea where the entry price will theoretically be, assuming it is to break down, and that's certainly no guarantee, right? But I can kind of get an idea of how I would kind of build this trade out, kind of the movement that I see. So if I'm looking at this, I'm thinking if this does break support, realistically, I don't see any technical reason why if this support gives out, we're not working down into this 163. Now, new things can develop. I can be terribly wrong, but that's how I look at it, right? And so it's just going to help me kind of visualize what this trade would look like. If I were, getting into the trade at this very second, where about would my stop loss be? Again, might not be exact, but, depending on your rules, we can say, well, our support zone is here at 175, we'll call it for lazy math purposes. I need to move my head there. And so I can see my ATR. We have an ATR right now of $3.58. So 35, 36 cents, beyond that would be 10% of the ATR. So 175, 40, I'm gonna not be too precise here, just kind of show you how I would do that. How the heck did I do that? Probably 10% of the ATR, a little too tight, probably more 50% of the ATR, but that doesn't mean I can't or won't go that route. So I'm just kind of setting it up that if this breaks support level, I would expect my stop loss would be in here. And if I'm really looking to build a trade, obviously I'm going to get a lot more specific, right? But I think one thing that we can all do as traders is overanalyze everything. This is really just going to give me kind of where my head is. If this breaks, this is about where I think my stop loss would be. This is about where my target price would be. This is kind of the movement to the downside that I could see happening if the support gives out. Maybe not straight down, but certainly that would be a signal to the bearish side. So it really is just going to kind of help me stay on top of this thing as I'm kind of just projecting right where it is tomorrow. So tomorrow, just a quick peek at RTN here. It's a simple yes or no. It either did close below that support, and then I can start, getting specific. Okay, well, if it goes 10% of an ATR below tomorrow's low, then I'll look to get in, or it didn't, and that's probably the more likely outcome. It didn't break below that support, so I'll see you tomorrow, right? Or in this case, I'll see you on Monday. So Johnny, that's how I will go about doing that. On the other side of things, like a Mickey D's here, a little bit of a pullback on Mickey D's. I already have this one thrown out here, so I can kind of just set it together. Okay, well, if I've got this, candlestick right between these moving averages, a little bit of slowing, just had a good earnings report in an area, the discretionary sector that I really like, and I'm looking at that sector as a pullback opportunity as well. And you may or may not like McDonald's, and of course, this is just an example anyway. But if this does move to the upside, where would I be looking to get in? I can be pretty specific here. I want to see 10% of an ATR above this. In this particular case, that 9 EMA sitting right on top of me is something I'd want to get above personally, just to make sure it doesn't act as a resistance zone. I'd want my stop loss below today's low, but in this particular case, I'd want to make sure I push it just a little bit below that 20-day moving average. So I'm going to use 10% of an ATR to basically make myself be consistent, right? That's just my rule. It's not like it's a magic number, but it makes me be consistent. I want to be 10% of an ATR below today's low, and I want to make sure that puts me below the 20-day moving average, basically. So I can kind of set this up, and hey, maybe I want to get this trade in for tomorrow, or maybe I'm waiting for that confirmation candle if I want to be a little bit more conservative. But I think one mistake, and I know I've made it in the past, and I think I'm probably not alone, is we get, we can overanalyze everything. When we just get so worried about what it's going to do tomorrow, we just kind of forget about the overall pattern, right? What's the pattern? Well, this is a pullback pattern. With the market pulling back, it going into a Friday, I'd like to see a confirmation candle on the market, on the sector, and in this case on McDonald's. If that means tomorrow we see McDonald's close up at 198, well, good for people who bought it, right? But it really can help us. We can do so much of the work ahead of time when the market's closed, when we don't have to make these fast decisions, right? We can do a lot of this work ahead of time and not get caught up in the day-to-day middle nonsense that we all can get caught up on. So I hope that gives you some ideas, Johnny. I hope that gave anybody else some ideas. That's kind of the way that I will do it, kind of build it out so I can kind of visualize it. This is what I'm looking for. Kind of helps me get an idea. What does my risk to reward look like? What would I like to see? So I think anything we can do to make our life easier, preparing in advance, is always a good thing. So hope that does give you some ideas, guys. With that, ladies and gentlemen, that is officially going to do it for the market recap today. But as always, thank you so much for your time. It's always a lot of fun hanging out with you guys here. So thank you for joining me. If it is your first time here, be sure to subscribe to the channel and hit that notification bell. That way, anytime we do new videos or live streams, you'll get that notification. And of course, join us over at Tackle Trading on Twitter as well. You can find me at FrankMartin23 on Twitter if you're ever looking for me, as you guys, most of you know, but that's where you can find me. We've got the Cash Flow Club going on here tonight for our pro members, so enjoy that, guys. Should be a lot of fun. Always a good time to talk cash flow, right? No one doesn't like cash flow. So if you're not a pro member, you know the drill. You're more than welcome and invited to come over, try us out. We've got a 15-day free trial. We're happy to get you set up. You can come see what we're up to over here. Think you'll probably enjoy your time. So hey, later, everybody. Thank you so much. It's always a pleasure, guys. You guys have a great afternoon. Enjoy the Cash Flow Club this evening. I will see you same time and channel tomorrow. And one thing I noticed today as I was getting ready for the market recap, and it's funny, this is how you know when you see me and I'm actually not quite as shaggy as I look today. Eventually I'll look at myself in the little box that I can see myself while I'm doing this recap, and I think, yep, I'm getting shaggy. It's time to trim this beard. So tomorrow I'll probably be a little less shaggy because it jumped out to me today. Yep, it's been a while. Time to buzz this bad boy down. So thank you so much, ladies and gentlemen. You guys have a fantastic afternoon. I will see you same time, same channel here tomorrow to wrap the week up. Thanks, everybody, and goodbye.